Hello, I'm Hickey from interest.co.nz and welcome to our monthly Roost Home Loan Affordability Reports. This is a series of reports that interest.co.nz does in association with Roost mortgage brokers to work out how affordable home loans are, not just nationally, but throughout the country. We produce a series of regional reports and national reports, which you can find on our website under this video and also in our property section. We work out the proportion of after-tax pay you would need to service the debt on a typical home loan. Now, everyone's typical home loan is different, and we've got various measures that we use. But essentially, we look at what proportion of a single median income is required to service the debt on an 80% home loan on the median priced house. That's our baseline. And this month, looking at the figures from October, shows a worsening of home loan affordability to the worst levels since March 2011. Now, this is largely because house prices have risen quite sharply in recent months. The New Zealand median house price is up to $380,000. That's a record high, up around about 5-6% from a year ago. In Auckland, it's even more dramatic. The median house price here, or there, depending on where you are, $530,000, another record high, up 14% from a year ago. Now, looking at how much of one median income is required to service an 80% home loan on those median house prices, we're looking at nationally an increase to 54.8% of your after-tax pay, up from 53.6%. That's the worst since March 2011. In Auckland, we're talking more than 72% of your after-tax pay to service an 80% home loan on the median house price. That's actually the worst since August 2010. Now, house prices are obviously higher, but there has been a slight offset from falling interest rates. Over the last 6 weeks or so, we've seen a fall in the 6-month interest rate, 6-month fixed mortgage rate, by about 30 basis points. That's the average. There's been quite a bit of competitive activity as ANZ has merged with National, Kiwi Bank, and we're seeing ANZ, National, Westpac, ASB and BNZ all being competitive. The 12-month fixed mortgage rate has on average fallen 20 basis points in the last six weeks, 2 months or so. That's partly because wholesale interest rates are a bit lower, the outlook for global growth is quite subdued, and inflation seems to be under control in New Zealand. However, the floating mortgage rate is unchanged. It's been that way since March 2011. That's because it's based on the official cash rate, which hasn't changed. However, rates are seeing lower for longer. Economists expect the official cash rate to stay where it is until late 2013. That's because the economy is growing slowly, inflation under control, and the high New Zealand dollar is keeping imported inflation low. The markets, however, see the potential for an official cash rate cut in the next year, about an 85% chance. We'll find out more on December the 6th when the new Reserve Bank Governor Graham Wheeler gives his first monetary policy statement. There's also been some talk that the Reserve Bank would look at loan-to-value ratio limits instead of a move up or down in the official cash rate. However, the new Reserve Bank Governor has said that even if he had those limits, he wouldn't use them yet. Just to finalise then, housing affordability has deteriorated in October from September. Rising house prices are the main culprit. There remain supply issues, particularly in the Auckland and Christchurch markets, which are helping to drive up prices. And banks are being very competitive with each other, keeping the pressure down on interest rates, which look like staying lower for longer. I'm Hickey. That was the Roost Home Loan Affordability Report video, brought to you in association with Roost Mortgage Brokers. I'm Hickey for interest.co.nz.